And we got quarter of the year in the books already.
Already done.
And it's been a pretty good quarter so far,
I agree.
I would say.
Things are happening.
Things are happening. We're going to see it in the numbers.
Which feels really, really good.
Exactly. Hi everyone, and welcome to Reality Check, where we'll discuss what's happening in Toronto's real estate market, where it's going, and help you make informed decision buying and selling real estate. I'm here with Devani Zito.
Hi everybody.
And we got
Anima Kadam.
And we got quarter of the year in the books already.
Already done.
And it's been a pretty good quarter so far, I would say.
Things are happening.
Things are happening. We're going to see it in the numbers. And I remember last year around this time, January, February was nuts.
It was, yeah.
And it was in March when they announced the interest rate
hike. And it hadn't stopped up until 2 months ago.
Yeah. And in January of this year, they said, okay, we're going to hold it. And that's when we saw things picking up.
Which feels really, really good.
Exactly. So let's start with my favorite chart of all time. Dot chart. Last year, January, February nuts, things kind of cool off. And this was around here that we saw the craziness happen. And as we progressed through March, April, May, things were slowing down all the way to July. Then that's when they actually did the 100 basis point that we saw, I would say, for last year, bottom of the market. And since July of last year, things kind of plateaued. I mean, we would go up, down, but nothing much happened. And as we can see, all the way to November, things were kind of in a straight line. You know, we were going up and down. Minimum was around 1,074,000, went up to 1,085,000.
But really slightly, right? Yeah. And you can take a look at the dot chart and how linear that is. It's really just up and down in a really healthy way, not like dramatic.
And then, you know, in December, you know, things slowed down, which usually does. We're back to normal cycles for real estate. You know, not mentioning what happened in COVID, because December of 2021, it was crazy. And in January, I would say that's where we saw the bottom of the market as of now.
And we really felt that.
Yeah. Well,
and I think that's why when things started to creep up, even though it was like that week, I don't know if you remember that week at the end of January, we really felt things happening. Like you felt the pace starting to creep up too. Yeah. And I feel like that really reflected a month later, looking back on the end of January, you're like, oh, wait, there's actually the creep.
And it was funny because I think we were talking about it in February, first week of February when we were recording, that we said things were picking up.
We felt it.
Yeah, and we thought it in the numbers in February that, you know, the number of sales kind of went up, average prices went up. And as we can see, you know, we see a huge jump between January and February. And
really huge.
Yeah, and then, you know, right now we're in March. So in terms of what the average prices have been hovering around, the average price in January was $1,038,000. And that was, I would say, let's say, call it the bottom of the market. In February, we suddenly jumped to $1,095,000. So about $60,000 higher in terms of average prices. And then last month, we went up to just over 1.1 million, 1.108. This is the trend that it's been going for the last 90 days. So the first quarter, everything has been going up.
So we're talking about almost $100,000 in the first quarter from price gap from January to March.
70,000, exactly. So 70,000 to be exact, on average, since January till now. Yeah. But again, this is encompassing the entire GTA market. This is a TREB, Toronto Real Estate Board, and it takes into account all
unit types, all kind of homes, and obviously all areas. So as far as like, you know, the deep ends of Mississauga, Oshawa, etc. No, not Oshawa.
Yeah, Oshawa is in the Durham region, Peel region, and we go to York region. With that being said, there are certain numbers that pull this number down, such as Toronto
like
condo market.
Yeah.
So one segment that actually dropped in average price was Toronto, especially the CO1, which is the core downtown.
CO1, just so that everybody knows, it's really the center core of the downtown Toronto market. Yeah. And that really kind of pulled prices down, I think, for Toronto, because the bulk of what happens in the downtown market is condos, right?
Yeah. Okay, market watch. Let's talk about the average prices. Average price is sitting at a $1,108,606 compared to last March. That was just below 1.3 million, 1,299,000. So we're about 14% lower in terms of average prices.
So now keep in mind, guys, We're talking last year to this year, prices are down. But if you're talking last month to this month, prices are up.
Yeah, exactly.
Big comparison there.
And that is huge for people to take into consideration. I understand a lot of people might have bought in the craziness of the market first 3 months of 2022. And, I've had a bunch of comments, people saying, whoever bought in the first quarter of 2022 is down, some segments could be down $500,000.
And that's okay. That's okay to keep mind of that, right? Because it's fact. But no one's buying and selling in a year.
Exactly. Unless you're selling that property, it's not a realized loss.
Yeah, you don't make money on entry. You make money on exit, right?
Yeah. So you're holding that long-term, and real estate is a long-term game. So I don't think anyone should be stressing about it unless you bought it to flip. Yeah. With that being said, the active listing is sitting at 10,120. And as you can see, that is kind of in line with the last I would say 3 years, 2020, 2021, 2022, we were all hovering around the 10,600 to low 10,000. Mm-hmm. And that is why the prices were rising the way they were rising. In terms of number of sales, that's what's really, in my opinion, not pushing pushing the prices as high as it should, because if the active listings are almost the same as last year, the number of sales, if it was close to 11,000, we would see, double-digit price growth. Right now, we're sitting at below 7,000.
If you guys can see, if you compare literally 2022 to 2023, everything that's been listed is pretty much getting absorbed, right? But if you're looking right now, everything that's been listed, there's a gap there between that 6,000 and that 10,000, which means there's 3,000 homes that are still sitting on the market. And obviously, we talk about all the time, those are the opportunities, right? That 3,000. But that's why there's not as aggressive pricing pressure as we would anticipate there being.
Exactly. And again, that goes back to the month of inventory. Last year, we had less than 1 month of inventory. Right now, we're sitting at a 1.47, 1.5 months of inventory.
And last month, we were almost at 2. And we are really officially still in a seller's market, guys, where January, we were in that balanced almost buyer. Well, buyers felt like they were in that buyer's market.
So now let's just look at the whole market as a whole in the last 12 months, because that will put things in perspective. You never go year over year. You got to take into consideration for the last few months what's been going on. So with that being said, right now we're sitting at 1.47 months of inventory, whereas January, which I like to think was kind of the bottom of the market.
Which is fine. It's January. Historically, always a slower month, right?
Yeah. And the month of inventory was sitting at 3 months of inventory. And that's why you would see deals out there. The average price was lower because not a lot of activity was happening. There was inventory on the market that was not getting absorbed. People were looking for deals.
Like, just to give a little bit of a recap, I have a buyer specifically who's looking for an investment, and we were talking, guys, there's so many great opportunities, right? The conversation I was having with him in December, January was basically like, look, you can find a great assignment right now, some distressed sales. You can also find a great opportunity in resale. I get on the phone with him like literally this week, and I told him, listen, there's no more resale options that are good deals. Like, those days are out the window. There's maybe some assignment opportunities at the moment, but even that's closing in.
Yeah.
Right? And it's really changing every month like that.
And I think that's the reality right now, because whatever that was sitting on the market has absorbed. And what's coming on the market, people are seeing the new prices. People are getting used to what the new prices are. So as a seller, if you're bringing a product to the market, you know what to expect. So your expectation is, in tune with the market. Whereas, let's say last August, things were totally different. People were still chasing, January, February, March prices. With that,
what scares me about what you just said, even, and I feel it in the marketplace, we are so accustomed to those crazy prices. I bet it's going to be such a shorter amount of time that we get back to that, because we've seen it before. We're used to it.
Yeah.
And so that's like the normal.
Yeah. So, this is why
people feel like that's the recovery that needs to happen. And I'm not from the opinion that that's the case.
Well, things have picked up, and I feel like, there could be a rate increase coming down the pipeline. There might not be, but I don't see that affecting the market that much, because for the last 6-7 months, the number of sales have been drastically lower than the 20-year, 10-year average. Yeah. So that means people are sitting on the sidelines with the number of immigrants coming to the country.
So last year, and I have it here, I'll pull it up. Statistics Canada reported in March, so this March, that we welcomed over 1 million full and part-time residents to Canada in 2022. These people need homes.
Exactly. So with that being said, and we see a lot of people with work permits right now, looking for not only places to buy, also places to rent. So again, like the demand is high. That coupled with number of people that didn't buy them, they stood on the sideline looking to purchase. I don't see another 4% rate hike in the horizon unless something crazy happens. But with that being said, another 0.25, another 0.5%, I think there's a lot of affordability right now in the market to absorb anything that slightly comes lower than the market value. It will, suddenly gets absorbed. I mean, like we've had properties right now that we put on the market without any offer dates, and we get multiple offers on it just naturally.
I feel like everyone just all of a sudden decided they wanted to buy.
And that's because people that are on the sidelines are looking at properties that they're interested. All of a sudden, they see something that was supposed to, for example, say for $1 million, sold for $1.05 million. The next one comes on the market.
That's the new price now that's been set in that pocket.
They find out there's 20 offers on it, and that also sells over $1.05 million. So now the person sitting on the sideline that's been sitting the prices coming down for the last 6-7 months is like, okay, you know what? The price is going up. Let me get in the market.
Let me get into it.
Now this person gets in the market, has the liquid cash to purchase the property, and maybe purchase the same thing for higher than the previous sale amount. So now all the other people are like, oh my God, property that was selling a month ago for $1 million, now it's selling for $1.07 million.
And that attracts like, right? That really creates buyer confidence because everyone sees everyone kind of making those transitions. And so they're really comfortable doing it. They're like, hey, if this guy is doing it, that guy is doing it, it might be the right time right now.
Exactly.
Right?
And again, you can never time the market. So, I mean, now...
We can.
We'll try to. And I actually wanted to talk about this because when we look at charts and all these numbers that we see, we kind of, to a certain degree, we can see where the market could be going unless something drastic happens that, we don't see. If we had the pandemic happen, no one saw that coming. Suddenly, they increased their rates by 100 basis points.
But let's not forget what a low interest rate environment looks like.
And that's why
that's what people need to decide. Do you want a low interest rate or are you looking for a low price? Because both things do not happen at the same time. Traditionally.
For the last few months, people have been sitting on the sidelines. Now, people are going to come back. People that have a need for an actual place to live, they got to come and buy something. So
we're not talking about bargain hunters anymore.
We're not talking about the speculators or investors, people who have an actual need to purchase. We're seeing it firsthand. A lot of people actually, either selling their condos because the gap between the condo, townhouse, semi has shrunk so much so that it will allow them to purchase and upgrade at an easier pace than what it was last year. So let's just, again, go back and look at these numbers. Few numbers I want to look at. 1, days on the market has come down drastically. In January, we're sitting at 29 days, almost, a month. Now that has come down to 19 days. So this is why things are selling faster. So the price from $1.038 has jumped to 1.108. The months of inventory has dropped by almost over 50%. From 3 months of inventory, we're now down to 1.47 months of inventory.
From how many listings?
And the active listings were about 9,300. Now we're sitting at just over 10,000. So, the active listing hasn't really gone up drastically, but the sales have gone up. So January sales were sitting at 3,100. Now we're sitting at almost 6,900. So we have over twice as many sales happening. So this is why we're seeing what we're seeing in the market, that things are selling much faster and getting absorbed, and not a lot of inventory is going to be left on the market. Anything else to add, Dev?
No, that was perfect. Moving on. Micro markets.
So one thing that I really want to talk about this time is exactly what's happened in the first 3 months of the...
I'm laughing because it's like this time you really want to talk about this.
Yeah, no, because for me, it was pretty interesting because I remember we talked about it in January, saying that once they hold the rates, and we were talking about it before the announcement, things are going to pick up. And I remember, I think some comments saying, things are going to go further down. No one can afford their mortgages. Listen, if someone bought, somehow got a mortgage, and now they can afford it, I don't see their percentage being that high that would affect the market. 1, 2, we have the stress test. People even who got mortgages back in 2018 that are coming up for renewal, they went through the stress test. they were set up to be able to endure such high interest rates.
Yeah.
If they can't afford it, they're not going bankrupt. They're going to put it on the market.
But the banks also created this new program where they extended the amortization for people with the variable rate.
So right now, what's in 2023 budget that they announced just to help a lot of homeowners was that if someone is having a tough time with their mortgage and if they want to increase the amortization of their mortgage, they can actually go to the bank and ask for it if they're in a situation. And I believe there's got to be some criteria to qualify for it. But first, you can do that to lower your mortgage payment. 2, if you're in a bind that you have to sell your property, get rid of it, break your mortgage, whatever it is, the penalty that the banks are charging needs to be waived. And they cannot be making money off of you in that situation selling your property. So what that is like usually you have to pay some penalties, fees, or whatever it is, 3 months interest, or if it's a fixed mortgage, something else, that needs to be waived. So essentially, bank on that mortgage, when you're breaking it, they will not be making any money. Or if they're increasing your amortization, they will not be charging any admin fees or penalties or any sorts of other fees, just to help you out.
I believe this is only for variable mortgages.
Yeah, that is for only variable mortgages. That's what I read.
I've heard that.
Yeah. Again, these are some measures just to help people either, continue till the rates come down or, get out of a property.
Bad situation.
Yeah, get out of a bad situation with minimal damage as possible. Going forward, I want to talk about the 3 areas since the beginning of the year because I found that really interesting. So as I was mentioning, at the beginning of the year, we talked about if the rates are held, prices are going to start rising, sales activity is going to start to rise. With that being said, it kind of has happened
that way
in the last 90 days. So let's look at it. Overall GTA, we were at 1,038,000, almost 700. Now we're at 1,089,900 or 819. In Toronto, the average price was below $1 million in January, which is really crazy, but we were sitting at almost $988,000. Now that price has come up to $1,047,000 almost. So that is about 6% increase in just 3 months. York region didn't have that much of an increase, but things are still interesting there because we were sitting at about 1,285,600. Now we're sitting at 1,318,000. So that's about 3%. This is where it gets interesting. Mississauga, average price was sitting at 920,000. And right now we're over $1 million. We're $1,003,000. So that's about 9% increase. That's about 3% monthly that the prices have gone up in the last 3 months. And Oakville, and that's where we were always saying there was a lot of opportunities there. The average price in January was as low as $1,381,000. And, I think we talked about it that this is not going to stay like that because things are absorbing. And we saw that in the last...
And it's such a high in demand pocket traditionally.
In the last 2 weeks of January. And right now from 1,381,000, we're sitting at 1,528,000. 1,528,000. That's 11%. Yeah. That's 11% increase in just 3 months. So with that being said...
But dollar value is what to me is the most incredible kind of way to put it.
So let's just see how much was this. 1,028,000 at 1,381,000, 147,000. So that's 147,000 across the board on all types of housing in 3 months. And I don't see that it's slowing down because a lot of, especially detached homes, were selling at a discount, which I've seen, especially in the last month, they've all been absorbed. Anything that was sitting for a long time, they've all been sold conditional, and not a lot of new inventory is coming up. And that is normal because when people see homes selling, they're going to kind of hold off to see, to get the highest number. To get the highest number. And, because of that, some inventory is going to be held back, and that's going to lower the inventory. The demand is going up higher, and probably we're going to see higher prices.
I think a lot of people are flooding to Oakville too, with a lot of the condos coming up right now, right?
Yeah, so there's a lot of condos over there being built as well. Before. Yeah. And I mean, let's right now, before we end it, where do you think are the opportunities right now in the market overall?
I think downtown Toronto right now, condos.
Yeah.
That would be my number one, and honestly, not the only. But if you are an investor, I think that would really be the best place to be because of obviously rent versus mortgage, right?
Well, I mean,
that's a big one for me. Because rents are so high right now that name me a time where you could have mortgaged something, right?
Yeah.
And still been kind of cash flow even, maybe not positive.
Yeah. So, I mean, like, again, like it comes down to how much down payment you put down, but like the rents have risen so much that it makes it viable to buy something and the prices are lower. So I think you're right in terms of the opportunity. I would say downtown Toronto, especially in the CO1. I haven't seen any other pocket that I would say like it's really like, good place unless you go really north. I would say Bradford is another area that I still see sub-$1 million detached homes, 2-story newer homes. That's another area.
Yeah.
Queensville,
I also feel like
Keswick.
Oakville, I know that we say the window's closed in, but I feel like there's still some time.
There are still some, deals lingering, but it's not as good as what it was back in September, October, November. So I mean, like
Mississauga, I feel like the prices are going to go crazy.
Yeah. So so we see it in the numbers. Durham region, for example, we have less than 1 month of inventory, so nothing there is going to be, you're not going to get a super deal. The average prices are lower, the affordability is higher. Yeah. But again, just to recap, I would say downtown Toronto, especially the core, which we call CO1 financial district around there. Yeah. There's a lot of condos right now that you could get below, 700,000, below 600 even. That makes a lot of sense in terms of renting. And if you're looking for detached, I would say Bradford and Keswick would be some good areas to look at.
I just want to touch quickly, really, really quickly on identifying a good deal. Because I've had a lot of people ask me for a good deal, and I'm sure you have as well. And what does that mean for you? What is a good deal? Is it like you need to get a tenant in at this monthly rent? Is it you need to yield X? What is a good deal for you? When we look at a good deal for a client, it's really that's this simple. Is it trading under market value? We're talking, if something's $1,100 a square foot traditionally in the area, if you're getting something at $1,000 a square foot, guys, that's the deal. It's really as straightforward as that.
You got to see what your criteria is, because some people care a lot about capital appreciation. A lot of people care about cash flow positive properties. So, they don't usually go hand in hand. So you got to determine really what's important for you before deciding which area to purchase. Again, we can help you with that because a lot of places that have high rents, the capital appreciation is not going to be as high. And,
that's okay.
Yeah, as a quick example, I mean, like, for example, if you go to Oshawa, there's high rents, but, like capital appreciation, may go up quickly, but it's not as high as what it could be, let's say, in York region or in Toronto. So you got to determine what's
Are you long-term? Are you trying to, buy and sell maybe in the next 5 years? Or are you buying and holding for the next 20 years? That's also really relative.
Yeah. So with that being said, thank you for watching. And before we finish, actually, 2 things. One, if you find this information useful, make sure to click subscribe, do that thumbs up, and share it with your friends. And second,
comment below.
we still have the group for assignments. So if anyone is looking for some hot deals and assignments, be sure to message us, and we'll let you guys into our WhatsApp group that we send, weekly hot deals.
The good stuff
that we vet personally to make sure they are not only below market value, they're in good location, and if you're looking for rental income, the rental income is at its optimal situation. Thanks for watching, and we'll see you next month.
Have a good one, guys.